Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So, pretty lethargic day. Futures opened down a few points, and I think we closed up a point or so. No big deal. And there was some spirited trading within the day. You know, it's the haves and the have-nots, which is what's been taking place over the course of the past few weeks. So, I think the guys that are having some success are just doing less. They're not so spread out, but they're going where the targeted action is. And there's been some divergences, so it's been hard to find. Look at a quick chart of just go the SPX first. You go take a look here, you will see that, you know, here's where we are. Okay, this was your reversal on November 16th. Here is your quick follow through, held higher, then continued all the way up to a mini trend line. But there's, you know, rightly so, pause right here where there's some, prior congestion, so to speak. And today in the morning call, we said as long as we hold higher, as long as we hold above 1409, there's a chance that we can continue. But there's no power here. Okay, sometimes there's just no power, and maybe it could be because the Fed is starting their two-day meeting. So why would people make big bets into resistance, beforehand? Or it could be that this is the type of trade we're going to see going into the end of the year because we still have the fiscal cliff, we still have Europe, we still have Big Ben, we still have our own economic worries, whatever. There's haves and have-nots, and there's a lot of trading going on. First thing I'm going to do is just going into Apple because everyone wants to know what's going on with Apple. And Apple has been rewarding traders because there is movement, but it's hard to just trust either way. But overall, I think there's damage in this chart. There's been a lot of gyrations, and gyrations usually lead to more the downside because that's how institutions get out of all their stock. If you look here at Apple, I always dissect this on multiple time frames. In the last time frame, if you remember this head and shoulders top, that led to a move down from 700, further than people thought, all the way down to 505. Okay, if you remember, we broke below the 21-day here, something that we were riding this entire time, so to speak, or the 8 and the 21. Here's where the 21 was. And then every level along the way, it continued to show weakness. Here was another trend line that it broke in the process, broke below, couldn't get back above, and then broke below that. Here was a 200-day at the time, never even really thought about bouncing off of it. And then lo and behold, here was your first move. This was your first reversal November 16th, had some buy appetite down there. We went sideways and then continued to where it faltered right where the 200-day was coming into it. That's when everyone started talking about, resistance, and then boom. This was a move to the downside that definitely was very fast and furious. So to me, you think about it, from 700 down to 505 to take back maybe a little bit more than a third to come back so quick, I'd be a little, just say skeptical or just non-trusting. You do have a minor, trend line right here that guys will trade against, and I would say if Apple stays below 540. Okay, which would be really weak. If it goes like a few days down here and can't get back above, the 540, I would say, again, the probability of this breaking would increase. I think to get some tension off this stock, to get it out of harm's way and get it off the media every single other second, you would think that it should get back above 555. Okay, so that would, take some pressure away and give bulls a little bit something to grab on, because when you take a look at this macro pattern here on a bigger time frame, okay, where you see, the left shoulder, the head, a right shoulder that couldn't even make it up to a level where I thought maybe we can go, and then you look where it is here, it's definitely a little worrisome. Okay, if Apple were to break and close below this little minor trend line that's down here, so it starts breaking below between 505 to 518, it could see this 586 very quickly. 486, and then you have a gap, in the stock from way back when that goes all the way down to here around 440. So at this point, I would just be very, very cautious. I'm not saying sell your stock here. I'm not telling you what to do with your investment long-term stock. All I'm saying is with patterns, this was your first pattern. It was more of a topping micro pattern. This was a trend line that broke, and then you had your first bounce. It was somewhat tradable. You measure to see what happened here, and then what happened here I don't think is constructive for long-term bullishness in the stock. So with that said, here is your new point of references to trade against, and we'll see how it holds it. If it holds it and continues, hey, who knows? Maybe it starts to build some constructive type of action. If not, and it stays below this 540 or 555, chances are you're going to see a bear flag where here's your pull, here's your flag, and then it could set up for a juicy short. And I hate to say that, but we'll see what happens. So let's get Apple out of the way. Let's talk about some other things that acted well today. Some cloud computing stocks are starting to have some decent action. So first things first, you look at CRM. I know it's a hard stock to trade, very, very tricky, but lo and behold, you had a quick move back to highs, held the 200-day, came back up. It's flagging right here. So this looks like it's a candidate for higher prices if it can get and stay above this 160.50. VMW, which used to be the class of the group, has a lower level setup. Nothing great, nothing to write home about, but more of a B-level trade where it's holding up in this area. You take a closer look here, and you will see that this is the zone. If it can reclaim the 200-day with 92.93, perhaps it can continue. Another one in that group, FFIV, lower level trade, but these lower level trades seem like they're working. It's like they're going after the stocks that have been beaten up and the quality is not doing so well. So here also this FFIV could be on your radar. Like I said, as far as quality, look at Amazon. Today, the morning call, just talking about how you can't chase things and how it's hard to trust, had a small ascending channel. And today, some guys actually finally got rewarded if they were looking from the short side. You look here, this was that descending channel that bottomed and showed relative strength on November 16th, broke above it. This was a nice move. I think I drew this line this morning in the morning call saying, below this area, 251-ish, you could see a nice little trade, and it broke. So at this point, it could see more, movement to the downside, and this level comes in around 244. Big move from 220 to up here. Some shorts got a little paid finally, But again, we'll see how it goes and we'll measure it. We'll see if it can continue. We'll see how it opens. If it trades below today's low tomorrow, we shall see. This is your new point of reference, okay? And from there, we also talked about Google. Nice little trade in the last week or so. That was back here, okay, right around 660, then 675. Topped out right there, 705-ish, right by the 50-day. And now it's trying to hold on to this, this 680 area. So I would just be a little skeptical that this wasn't just a bounce, because you look at the size of this potent move to the downside when they came out with their earnings midday. It never even took back, more than a third, let alone half. You need to take back half of a move in order to, to invalidate it, and it still looks somewhat weak there. As far as some of the banks are still hanging around. Bank of America last week gave us a really nice trade. It's holding up. You take a look at the chart here, you will see it's not an A play, but if you were long here, added here, I think you have to like what you see. The moving averages are catching up. You have another little flag type pattern. With a bit more time, it can continue. JP Morgan, I know, played a little catch up Friday. It wasn't a barn burner, that move, but at this point, this is somewhat of a, this is where it kind of broke above. So I would say the longer it stays above, say the 42 area and goes sideways, the higher the probability it can continue. This was a catch-up play. It wasn't a leader play, so we'll see. Goldman woke up a little bit today. It's been one of the laggard, or just out of place financials. You did get a small little reversal here where it traded below this little area and closed okay. So, it's something where if you wanted to enter a little bit for a swing trade, but really it's going to have to start getting above this descending trend line and break above this triangle here in order to get some kind of excitement there, which we haven't seen yet. As far as Facebook, I still think it's, it's hanging around here. You had your really nice setup below 24. Here was your big gap fill and then some. Small outside day, and it's been holding higher. Let the moving average catch up. Tried to go a little bit today, wasn't ready, but it seems as if it can get going again. Okay, I rode this long a little bit, flipped short, covered some, and then just got away from it as it's been holding higher. It didn't have follow through. This data take notice led to a higher consolidation. So I would not fight this if you're short. I know they have a big lockup coming up soon, but I think give it a few more days. LinkedIn, some guys were talking about it on Friday, and at this particular point, it traded above this nice flag type pattern. I know it's this was your little downtrend here. This was support. Here's where it started to act a little bit better. I know it took a little time, so it's in motion. And you know, this is just what's going on here in this market. You can't be too excited one way or another. It's been a long year. There's been intermediate ranges to trade. There's been leadership. There's been rotation. There's been a lot going on at this point. It's December, I don't even know, 10th. I am a little less available now. I'm actually studying for the Series 24. So, you know, today I apologize. I wasn't on the radio or the virtual trading floor. I will be back for Wednesday, and I will be a little bit more active in the Twitter sphere, you know, after then. And, you know, I think a lot of people are taking the time they need now until the end of the year to tidy things up, to put them in a position, you know, for 2013. For me, I got to take this test, and I got to detach myself a little bit so I can actually concentrate. And, you know, considering my day was filled up from 4:45 in the morning up till 10 o'clock at night, you know, before having to, you know, start studying for this. But anyway, enough about me. What about you? No. So with that said, I just want to give you a handle for Twitter and for StockTwits. For those of you who are members of our virtual trading forum community, you guys all know Vicky. Vicky is awesome. She's been with me for years. She's been sitting next to me for years. She's in my head. She helps me put together off the chart. She asks me what I'm looking at, thinking about, and she helps put together. That's why you see compiled by Vicky. She's really good at marking them up, and she's going to try and, you know, fill in and put in charts that she's thinking about, you know, if I happen to be, you know, taking practice exams and not by the desk and trying to detach myself. So you should follow her. Her handle is @ChartGirl, ChartGirl T3Live. So again, @ChartGirl, ChartGirl T3Live. And she's great, and she's going to hopefully add a lot of value for you guys. And you know, and she's hardworking, and I think she's just someone that should be in your, you know, on your feed if that's what you do. And with that said, just again, if you're not happy where you are for this year, this is not the time to play catch up. If you're it's one of those time periods where you walk around an office and some guys are miserable and some guys don't care. Some guys are really excited, and it all depends on where you are. And don't look at your next guy and be envious. Just look into yourself and figure out what it is you didn't do well, what you could work on, what you did well with, and increase that. And it's a holiday season. Hold your head high. Go to some Christmas parties. Enjoy your family. Recharge some batteries. It's been a long year, and, you know, get yourself all set up for the next year. So with that said, I'll see you tomorrow morning at the morning call, and have a good night.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.